Hi there, Kang here, and in this video I want to share with you a case study of a recent trade that we took together with our community over here. And this method here is also what we call the EWS methodology, where we combine the principle of Elliott wave as well as the seasonal trends based on 10 years historical data. So without further ado, I'm going to show you my screen, walk you through some of the information as well as a mini recording that we did. Okay, just before we actually execute the trade on Friday itself. Now, so what you see on this screen over here is what we call a seasonal cards, and you can see it's the pair on euro dollar. Okay, and between 10th of August to 25th of August, based on past 10 years, okay, there is within that seasonal trend of the buy direction, right? In other words, for the past 10 years during this period of time, euro dollar has a higher tendency, a higher probability of rallying. Okay, and therefore what we'll be looking out for during this window of period is for buy opportunity. Of course, we don't just get in just because the seasonal trends is there, but what we also include and add on a layer of analysis is using the technical portion. Okay, looking at the chart based on the Elliott wave principle to identify how are we going to execute and manage the trade along. Okay, so with that, I'm going to show you a snippet, a short recording of a session that we did with our community on Friday. If you translate that to euro dollar, we are getting a very nice flag here. Okay, so it did not really tag that 1.17, but it came very close to it. It's about 5 pips of it. I would just consider it has touched it. Okay, because again, nothing is going to be like picture perfect, right? So in this case here, if I just pull this up a little bit, right, you can see that zone is more or less that, right? It's done. Okay, so I will consider that as being tagged. It has touched it, and how it reacted of it is kind of like a crawl and then an impulse, and then right now we have a very nice flag that is forming. Okay, so for me over here, definitely I'll be very interested in the upside for euro dollar. Okay, at least again, you know, if you flip it from the dollar index chart, what we are looking is 1, 2, and then 3. Okay, whether this is going to be that big flag for another push down, again, we need to see how price react off this high. Okay, but right now we are still expecting the third push. Okay, ideal situation here is that we have this impulse correction and we want this to just go pop, and on a higher time frame we want it to basically just come all the way up here. That will be a very decent trade. Or if this can just consolidate and continue higher, even better. Okay, so overall we'll definitely look for the upside. The bias here on euro dollar is definitely to the upside. Okay, there are two ways we can get involved in this trade. I mean, one way, but two levels. One is a lower level of a breakout here around 1750. The other one is somewhere here, is around 1755. Okay. Now to me, we are already on a 1 hour time frame, right? So I would be taking more on the high side of this for the potential breakout entry. Okay, in terms of 4 hour, this is how it looks like. Reason is because I do want to give it some room, because this can still do something like that. Okay, before it go. So I want to really enter only if it breaks that high. Okay, to give us this is really a flat. Okay, so that's the logic and the thought process behind it. Okay, so that's how we can look for this trade. Right, so what we have saw on Friday is that the dollar actually weakens, and therefore we do see the euro dollar pushing up. Okay, and we kind of got involved, as I mentioned in the recording, right, together with our traders, using the simple breakout methodology from that trade, and we have indeed shift our stops to break even to manage this trade accordingly. And of course, moving forward into the new week, right, we'll never know what price will be doing, okay, how it's going to be developing, but the idea here is as long as price continue to correct, right, above our entry zone, there's a good chance and probability that it will continue heading higher, and all we have to do is just manage this trade accordingly to our system, to our strategy. Okay, so I hope this little snippet here can give you an understanding, or you can utilize this as a case study of how you can actually use the EWS methodology to trade the market, combining the technical analysis plus the seasonal trend to help you increase your probability of taking winning trades. So if you'd like to understand more, feel free to check the link below in this video, and hopefully this is going to be a method that's able to help you profit and trade consistently in the financial market.